Robinhood announced a bunch of stuff today, and if there's one bottom line that you need to know from all of it, it's more money for Robinhood. Because after all, that's the goal of Robinhood. Robinhood's goal is not to just give you a shiny app or to have users on the app. Those are all things that lead to the end. The end is more money. And how does Robinhood make a lot of money? Well, through rebates from market makers. That already probably sounds really complicated, but just know this. Anytime a transaction takes place, and it doesn't matter what you're trading, you could be trading Pokemon coffee mugs, Pokemon cards, real estate, stocks, bonds, private equity, options, perpetual futures, who cares? Robinhood does not give a flying hooty doody what it is you want to trade. You could be trading bets on sports odds or the odds of geopolitical events happening, like what are the odds Trump's gonna strike or run? These platforms do not give a flying hooty doody what it is you are trading. And the more options that they can give you to take your money and buy and sell stuff, the more money they make. And that's what Robinhood's event today was all about. Because ultimately, here's a very, very overly simplified primer of how this works. When you sell a poop, okay? So let's say we've got a nice little flaming pile of poop right here, okay? And we want to sell this. Well, what we're going to do is we're going to put a box around it and we're going to slice this up into, let's say, 10 slices, okay? So we now have 10 shares of poop. Well, the best user experience is that when you go into the Robinhood app and you say, I want 1 share of poop, and I swipe up, do you really want to sit around and wait for someone else to sell 1 share of poop? No. So instead, a market maker has inventory, and they're going to sell you that 1 share of poop from their inventory. In exchange for doing this, they're going to take a spread. So let's say each of these 10 shares of poop are worth $1. Well, the market maker might go to you and say, I will sell you that poop for $1.05, or I will buy poop from you for 95 cents. Okay? This difference right here is called a spread. The spread is 10 cents. Of that 10-cent spread in this case, Robinhood might get a rebate for basically sending the business to that market maker. And maybe that rebate is, let's say, 3 cents. I'm way oversimplifying how this works, but the whole point is Robinhood does not care what is in this bucket. They care about the fact that people are doing this. They're swiping up to buy and sell stuff. The market makers, they're the ones who hold the inventory of the piles of poop, and that gives users a good user experience. Have you ever bought or sold a stock and it's just or an option? You see this a lot with options. It's just pinwheeling. Your order is just sitting there and you're waiting for it to fill. And you're like, all right, I'll just change my price. And you just change your limits. The more you change your limits, the more the market makers start salivating and go, oh, the spreads are so wide. Okay. I'll just inventory that. Whether you're selling an option, they'll buy it, or if you want to buy an option, they'll sell it to you, right? That's how brokers make money. They do not give a flying poop what you're buying or selling, or if you make money or lose money. Obviously, it's nice if you make money because you're likely to stay on the app, right? So this is why they like to give you education and don't gamble and all this kind of sort of advice. That said, Vlad's event today was all about, hey, we're gonna, in the future, create a Robinhood chain so we can create essentially a real-world custody chain, and we're going to tokenize a bunch of different assets, whether it's bonds or private equity or real estate in the very long term. That'll be the last thing that gets innovated, or private company stock. So basically, the presentation we got today was, instead of a flaming pile of poop, because you don't really want to buy a flaming pile of poop, right? In this box, what we're actually going to do is we're going to say, hey, you're going to buy shares of OpenAI stock. Now, where does Robinhood get OpenAI stock? Well, either Robinhood or a market maker, somebody goes and buys $200 million of OpenAI stock from some overpaid employee inside of the company who wants to sell. So they now hold the private shares. And then whoever bought them can go sell them at a premium. Like, I got OpenAI stock, I got the hot commodity because some employee sold it to me. And then they turn around and resell it. You can do that today with like an Equity Zen or a Start Engine. The problem is it's a pain in the butt because often you have to be a qualified purchaser, you have to be an accredited investor. Robinhood might be able to streamline some of this by filing, Regulation A offerings and letting people invest in these private opportunities through their app. Now, somebody's going to make money on this. Either Robinhood's going to collect fees or sell it at a higher valuation, or there are going to be wide spreads between what these market makers are charging. But the whole point is Robinhood is trying to increase the amount of stuff that they have in this box, basically, this slice, right? So Robinhood started, if you think about it, they started with US stocks, okay? Then they went into crypto because the spreads were huge. You can make a lot of money on crypto. Robinhood makes as much money from crypto as they do on options. This is big, big money right here. So crypto and options, huge money. US stocks, they actually make very little money every time you buy US stocks because it's very liquid. So actually, the more illiquid what the pile of poop is that they want to sell you, the more money they make. In other words, the bigger the spreads are. Because if you go swipe up on Apple stock, the spread might be 1 penny. You go swipe up on, some low float stock or a meme coin or a private equity option or whatever, the spread's gonna be massive. The bigger the spread, the more the rebate, baby. That's how Robinhood makes money. So if they can now get into private equity or tokenized assets, their spreads might actually be even bigger. It's more money. And this is what they're announcing today, is that in Europe, they're going to allow you to buy US stocks by tokenizing it. So basically, every time somebody says, hey, I want $200 of Apple, Robinhood will go buy the $200 of Apple, and they'll give you a token which represents that $200 of Apple that they hold. Now, obviously, this creates some issues. First of all, are the regulators okay with this? Because you're bypassing European stock registration regulation. Presumably, Robinhood has figured that out and they're not trying to scam European regulators because they invited regulators to their event. It also creates some issues like, well, what if Robinhood loses my Apple stock? Well, they probably custody it over at the DTCC. So it's probably not a Robinhood issue. It's probably at some other higher level entity, right? Or some bank like a JP Morgan or whatever, right? The point is, that's probably less of the issue. The issue is that Robinhood, or the whole point of the announcement, is trying to create ways for people around the world, specifically now in Europe where they're expanding their platform to invest in US stocks without those US stocks having to list in Europe. I gave this example of HouseHack. If I wanted to sell HouseHack to where you could just swipe up on Robinhood, I could IPO HouseHack. So it's my real estate startup, househack.com. You've heard about it before. We pay a 5% yield through conversion, and then you get all the upside in the stock. It's open to non-accredited investors. Now, one of the reasons I know so much about sort of the broker-dealer world is because I've gone through broker-dealer licensing. Series 27, 24, 14, the Financial Advisory 65, the 63, the SAE. Like, I've done all these, the 7. There's a lot of legal and compliance work that's involved. Where tokenization is really great is you basically have T+0. That means there's no settlement delay, which means you don't have fail to delivers or fail to receives that you have to deal with because there's no lag in when money shows up and tokens transact. So you actually have a faster system, and it's a system that potentially enables you to say, hey, you want to sell that HouseHack stock in America? Cool, you have to IPO in the New York Stock or on the New York Stock Exchange or NASDAQ. Cool, that's very expensive. And it takes a lot of effort and work to do, but it's okay. You can do that. You've got your PCAOB audits, your securities compliance, and everything, which we already have almost all of that. If I now want to sell these shares in Germany, I might have to, and I want people to be able to swipe up in the Robinhood version of Germany. You can now, I think you can now download the Robinhood app in Germany, actually. I would have to IPO potentially in the Frankfurt Stock Exchange. Well, now I have to be subject to German regulation, German audits, German securities filings, German attorneys. It's a lot of work. Or Vlad can just go in and go, you know what? Just buy a token of Kevin's house hack, and then Vlad will go buy the actual underlying house hack shares, and he'll hold them, or he'll custody them at a bank or DTCC or whatever. And all of a sudden, you have skipped a lot of extra burden for companies to be able to sell their shares. So what does this mean for people? Well, it really makes no difference unless things go poopy doopy. Like if there's some kind of market panic and for some reason the tokenization system breaks, that would be a big risk. Other than that, the cool thing, the upside of it is, you could now basically hold that deed, the ownership of your shares, the token, which is really just a representation of your ownership, and you could go send it to your friend yourself. But then that also opens the door to questions of like, are you now selling securities in the United States? So there's like a lot of regulatory big old question mark over here. The big bottom line of this whole event is Robinhood introducing tokens enables them probably to sell more stuff and make more money per swipe. That's the whole point. So like everything they announce is good for the stock, good for the company, good for their revenues. How they figure out all of the regulation between all these different countries, to be determined. Are there downsides of tokens? Yes, but there are also upsides of tokens. Like again, tokenization, faster, no fail to delivers, no fail to receives. It's much easier for compliance. In the future, it's gonna be cheaper. You can do this 24/7. Tokenization is great. But remember, when you're tokenizing private equity, you're really just tokenizing somebody's ownership that they sold out, maybe an employee or whatever. You could buy this stuff now at EquityZen or Start Engine or whatever. And if you see, oh, I have to be an accredited investor, well, you probably have to be an accredited investor at Robinhood as well, unless they do their own Regulation A non-accredited filing. So tokenization sounds great, but you still have to do all of the legal regulation. It's kind of like people tell me, they're like, hey, Kevin, why not, tokenize house hack real estate? We can do that, but we would have to do twice as much work as we do now. Because if I were to say to you, I want to sell you 10% of all the houses house hack owns via a token, we would have to go do a non-accredited offering if we wanted non-accredited investors, so almost everyone. We'd have to do a Reg A filing, we'd have to get a legal opinion, we'd have to get an audit for that specific fund. It'd probably cost us $40,000 to $60,000 in audits and attorney fees and everything. Yeah, GPT probably writes it all, but you still need those legal professional opinions, and then we could sell that 10% to non-accredited investors. And now if we sell that to non-accredited investors, we have to maintain a ledger of those shares. And if we tokenize it, we double the work. We do a token and a ledger. Because the way US regulation is kind of behind right now is you have to do both. You do the token and the ledger. In the future, hopefully you could just do the token. But you're still going to have to go through that securities registration process. So tokenization has a lot of great in the background functions for making things cheaper. Robinhood is partnering on USDG, a stablecoin, and I think people are going to hear stablecoin, they're going to go, oh, it's going to be like Circle, it's going to moon like Circle. Maybe, but you need to see the partners that are involved in USDG, unlike USD, whatever, I wrote some of these things down. Unlike Circles, USDG is all of these different partners. So you're probably going to see way less stablecoin profit. And in the future, I kind of expect stablecoin profit to basically converge to near zero because everybody's going to have their own stablecoins. Visa and MasterCard will have stablecoins. Walmart, Amazon will have stablecoins, whatever. But they did mention this. Now, the whole point of everything that they announced today is access. They want European users to be able to buy US stocks and ETFs. They want you to be able to access private equity. The tokenization thing is really just the representation of your ownership. It's like the pink slip on your car. When you have a loan on your car, you don't actually hold the pink slip. Some bank trustee holds your pink slip. When you pay off your car, you get the pink slip. The token is nothing other than the pink slip. Like you can still drive the car and not have the pink slip. I know that's a little complicated to think about, but think about it kind of like a deed on a property. A token is really no different than the deed of your ownership of the property. It records your ownership interest. It just does it faster on blockchain and it's public. Everybody can see it, which obviously reduces costs for the intermediaries in the long term. But anyway, there were some questions that came up with this. Some people were wondering what is the potential that this bubbles up valuations more? Well, if more people want to buy Apple stock, yeah. Valuations could actually go even higher by enabling Europeans to just go buy all of this. Now, other companies have already been doing this. They have, European versions of Tesla stock. They have, Binance has international stocks that they basically already tokenized. So this is just specifically to Robinhood. It's them getting into this game that has already been done by others in the past. Theoretically, you could also self-custody the token, but you wouldn't self-custody the share if you're not in the United States. So you're kind of one step removed from the actual ownership of the underlying share. Somebody then asked me, why, Vlad mentioned this word burn, which sounds like a dirty, potentially scammy word. That's because when you hear of meme tokens that are like, oh yeah, we're going to burn some of it to lower the outstanding supply to increase the price of the meme token or whatever, people usually associate burning with it should be good for the underlying holders, but there's always a yeah but, and then rug pulls come out of it. So I don't think people really resonated with what Vlad was saying with this burn phrase. So I think an easy way to think about this is this. Let's say you say, you know what, I want to buy, let's say you're like, hey, I want to buy $200,000 of house hack, but I want Vlad to buy it for me, okay? So you give $200,000 to Vlad. Vlad buys house hack stock, and then Vlad gives you the token to represent that interest. I guess I never shared my screen. There you go. So it's $200,000. You give it to Vlad. Vlad goes and buys the underlying stock. Vlad gives you a token, and you now have that token ownership of that $200,000, which you could transfer to your friends or whatever, subject to obviously the securities regulation. Now, if you undo this, and you're like, I want my $200,000 back, then what you do is you burn the token. Vlad sells that house hack, and then Vlad gives you your $200,000 back, theoretically, or whatever the value is at the time, right? That's what they're doing. And the whole thing is Vlad doesn't want to actually hold the underlying. He just wants to transact. Remember, why does he want to transact? He wants to transact because that's how Robinhood makes money. So again, it doesn't matter what's in the basket. It just matters that they're selling stuff. The more illiquid it is, the more money Robinhood will make. That's why crypto and options make a lot of money for Robinhood, because they're very illiquid compared to US stocks on NYSE or NASDAQ. Private equity is even more illiquid, so presumably would make even more money for Vlad, which is brilliant. I love the guy. I think he's brilliant. But this is hopefully where you understand what they're doing is just opening access to people to get what they want, exposure to US ETFs or stocks, or in the future real world assets or whatever. And yeah, it potentially creates some more buying pressure and potential overvaluation concerns, but that's different, right? Technically, if you have more people holding something, there should be more stability and less volatility. Now, I know some people are like I see some comments here, they're like, oh, how's this different from FTX or Sam Bankman-Fried or whatever? So the thing about FTX is that FTX was not a broker-dealer, right? So, and I'm not trying to shill for the whole Robinhood here, even though I love Robinhood, and I probably would shill for Vlad and Robinhood. But the point is, that's not the point of this video. If anything, I'd love to shill you house hack. Get your exposure to real estate. Go to househack.com. Read the investor paperwork and the risks related to investing in private equity. Anyway, the Robinhood is a licensed broker-dealer, which means they have really strict custody compliance in terms of who holds the underlying assets. FTX was not a broker-dealer, and then they were able to essentially self-custody, which then removed that sort of level of security that you get by having the DTCC custody your assets. These are a lot of really big entities and names and words and stuff. But the point is, here's a US regulated company. This was not a US regulated company. Worth understanding the difference. Now, a lot of people really liked FTX because it gave them access to 40x leverage on crypto, or gave them a tool to buy crypto back then. But most creators, myself included, would always say, don't keep your money on an exchange. So if you're going to use an exchange, you buy there, and then you take you self-custody, get it off, put it on a hard wallet, cold storage, whatever you want to do. and get it out of these exchanges because you don't want to rely on that broker-dealer. That's less of an issue with something like Robinhood just because they are so US regulated. But yeah, broker-dealers do fail in the United States. And that's where, in the United States, we have something called SIPC. And it's kind of a way, it's sort of like FDIC. It's a little different. There are differences. You should look up the differences between SIPC and FDIC. But it's basically a way to help you get some of your securities back should a broker-dealer fail. But mind you, they're custodied somewhere else. So even if a broker-dealer fails, technically the underlying assets aren't at the broker-dealer anyway. They're somewhere else. So SIPC really only applies when there's a loss above and beyond, what was custodied elsewhere and what was able to be redeemed. So I understand all this stuff is really, really complicated. And so I'm just going to bottom line this as simply as possible. All these announcements from Robinhood are exactly what Robinhood should be doing. It's exactly what Vlad should be doing. And there's a reason the entire finance space is rocketing right now. Because, well, first of all, Circle gets everybody a big boner right now. Because the stock has just done so well to the dismay of Visa and MasterCard. The people at Visa and MasterCard are fuming right now. Meanwhile, Visa already does, stablecoin back-end work internally. And so do many other companies. Like JP Morgan has had a stablecoin that they've had in the works for years. Circle is just the most public of that, if you will. But these financial companies are doing really well today, and it doesn't really matter what it is. It could be a company like Dave that literally hands away money to get people to sign up for their account, which helps them continue to show user growth, which helps their stock skyrocket. It's kind of like a brilliant bubble that guaranteed will pop one day, but for now it's just going to the moon. So maybe you can ride that wave for now. But look at the financials. It's insane. Really a topic for a different video, frankly. But the financial sector is doing pretty decently. I mean, Hood's up 10%, SoFi's up 9%. Carvana and Affirm up a little bit. But finances are doing really well today. To the downside of the semi-sector. As you can see, just like what we talked about in our alpha report, we're unlikely to hold these mid 140s lines. And sure enough, we're now bouncing off the low 140s. See, the lines are working quite well right here. Just like what I said on Circle, I said that people would be taking profit on Circle and don't get caught up in a run on Circle today. People are probably going to take their profits again. Also in our alpha report this morning, before the market opened, I suggested this would be a risky spot. So check that out if you haven't yet over at meetkevin.com. But anyway, broadly, so bottom line on Hood, more stuff to sell you, more tendies for Vlad. And maybe one day I can have a nice suit like what Vlad had for his presentation in the French Riviera. So yeah. Oh, okay. I mean, there's a question here. Is Hood going to have a cash sweep problem if Trump gets his way with cutting rates to 1%? It doesn't matter what interest rates are. They will just pay you what they are. Right? So, example, if a stable coin, you could use a stable coin, you could use a bank, replace it all for the same, but this question has come up before. If a stable coin is paying you 4.5% right now because they're paying you at all those treasury yields, if treasury yields go down to 1%, guess what they're going to pay you? 1%, or maybe a little bit less, so there's a spread in there for them to make profit. If yields go negative, they might not buy treasuries at all, they might just hold cash, and then they basically yield zero. Or they hold treasuries that yield negative, and then you yield negative in a negative rate regime. It all balances out, is the way to think about it. But I don't see any particular risk there.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.